Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to talk a little bit about what's coming our way for the next 5 days on the markets. We're also going to look at a few live trades. There was an absolutely fantastic trade earlier today. I'm on gold futures, February 2026 gold futures. It was a banger, and I'm pretty happy about it. I'm grinning ear to ear. But it was a very, very good trade. It was a Fibonacci retracement sell, which was fantastic. I love it when we get a nice hit on a 38%. and then we get to go short. I absolutely love that. Probably my favorite trade out of anything. I mean, I love shorting the markets. I have a lot of fun with that. I always find that typically my profit targets get hit in a hurry when I short, and it's always a little bit more of a battle when we go long. But that's okay. A lot of folks, all they do is go long, and they make a lot of money doing it. Personally, I am partial to short. So if you ask me, Shane, what's your favorite kind of trade? It's a short sell, typically on gold futures. I love it. Nice washout areas. They've been setting up great. I'll show you exactly what I mean here in just a second. So good to see everybody back in the room. Thami, good to see you, Thami. Welcome. Tuku, good to see you. Bobby Bob. Hey, Bobby, how you doing? Andrew Gorwal. Let's see. Hi, Shane. Gold is in a 62% support zone on the 4-hour chart. We'll go ahead and pull that up as well. We'll look at that spot gold and also the gold futures market trade. It was very, very good. Like I said, I'm happy about it. Lita, good to see you, Lita. Welcome. Gordon Williams, always a pleasure, guys. Interesting week, interesting day. This week is a big one. This is the last big week of the year. And we're just going to cut right to the chase. You're going to have NFP tomorrow. You're going to have CPI Thursday. These are huge events. You're also going to have the Bank of Japan getting involved on Friday with probably an interest rate raise or an interest rate hike. And it's funny because I listen to a lot of different media sources. Today I'm listening to alternative media, and they're talking about the carry trade. And I go, we're talking carry trades? Really? So I'm absolutely blown away by how big of a deal this rate hike is going to be out of the Bank of Japan, and I'm interested. We're going to look at we got to look at some yen. We got to trade some yen. Why not? A lot of great feedback from last week on our tick scalping webinar. A lot of you tuned in, and we did some live tick scalping. It's one of those things where it's always a sort of a fine line. You know, do you really want to sit here and just make trades and basically show people, you know, the way to make money in the markets? Do you want to do that every day? And I go, no, not really. I don't think it does anybody really any good, but I got a lot of great feedback, and a lot of people were saying, wow, I mean, you could just show up and make 10 ticks. And I go, yeah, I've been doing this for 15 years. And it's not an ego thing. It's nothing. I want everybody in this room to understand that if you spend the time there, it almost seems like it's too easy, but it's not. A lot goes into each and every one of your trading decisions. A lot goes into each and every one of your winning trades. And it's very, very important that you guys understand the dedication that's needed to actually excel in this line of work, and also what it really is to be mentally dialed in as a trader. I mean, it's not a normal job, you know, and this is I'm going to start with this because we need to talk about it a little bit, because this is not a normal job. You don't just show up and say, okay, well, I'm going to the factory, I'm going to put my widgets together, and we're going to sell the widgets or whatever you're going to do. This is not a normal job. You can make more money if you're dialed in 20 minutes than most people can make in an entire week of working in a factory. You really can. And the problem that most people have is they don't really accept that. They don't understand that, okay, we're going to go in here, we're going to make some money, and that's our job. They don't really think about all of the preparation, everything that it takes to make these trades, to spot the market, to understand what rotation is, to understand what a trend is, to have a good feel for it, to be able to balance your budgets, work your money management. I mean, it's hard. Sometimes you show up to work and you lose money. It's hard to lose money if you have a conventional 9-to-5 job. Typically, you go there and you make money. So you know who you are out there. Ask me a question about the tick scalping, and I don't really do much of that on these live streams because I'm not sure that it's a good thing. But yes, to answer your question out there, and you know who you are, yes, it is that easy sometimes. And you have to accept that. But you also have to be a professional and understand all the work that goes into those decisions. It's not easy to do. It looks easy. It's not easy. So that's the first thing that I'm going to say. Let me see. Tammy, good to see you. Let me see. Jason Max and Yo Shane. Montana did their thing on Saturday. So the Montana Grizzlies put on an absolute show against South Dakota on Saturday. I was there. It was great. It was my dad's birthday. It was his 79th birthday. So we were at the game, and they won, and it was fun. It was really a great time. Voice is a little hoarse. We were getting after it pretty good. This week is going to be the biggest game in Montana State history. It's University of Montana against Montana State Bobcats for the right to go to the national championship game, national semifinal. It's the biggest game in the state's history. There's already a buzz on the street. There really is. And I went to buy tickets. There was supposed to be an auction this morning. I went to buy tickets, and they sold out before the auction even started, which was kind of funny. I didn't know that that was even possible. But the going rate to get in the stadium's $545, and to sit on the 50-yard line is $5,000. And I'm going, I'm going to be watching it on TV, guys. It breaks my heart to not be in the stands for that one, but I'm going to be watching it on TV. It's just too much money. $5,000 to sit on the 40-yard line. Unbelievable. Ralph H., good to see you, Ralph. All right, guys, I've rambled on long enough. Let's go ahead and get on with the program here. Switch markets, if you want to trade anything that you see here today, or if you want to trade some of the analytics or some of the trade ideas that we put out there, head on over to Switch. Switch will get you up and loaded, ready to rock and roll. If you're in a municipality, that is supported. Now, if you're in the United States, if you're an American like me, you can't trade with Switch, at least not yet. But if you need a broker and you need at least a nudge in the right direction, PM me, give me a private message. I'll tell you who I've done business with in the past here in the States. Maybe that'll work for you. Maybe it won't. But definitely want to do that. Okay, a great trade that came across the board earlier today. Gold futures. You know, I'm a crude oil specialist by nature. Gold futures, I love them. I love trading gold futures. And it's not necessarily because you always win, but, man, when you win, the money is there. I mean, this market moves. And basically what we have to have as a trader is you have to have volatility. You have to be dialed in. You have to be ready for the moves. And then you got to let them unfold. And this right here was an absolutely fantastic trade. You had a nice Fibonacci retracement sequence. This started about 5:30 a.m. my time, about 7:30 a.m. Eastern, which is about 2 hours before that Wall Street open. Nice big sell-off. And then right there was your bottom, sort of your low that developed about a half hour after that Wall Street open. And there was what I call a checkup. You got a bounce. Bidders came in, knocked a lot of the retail shorts out. But we had just an absolutely fantastic entry right there at 38%, which is right around, 43.58, somewhere in that vicinity. Beautiful trade. It was absolutely perfect, and you saw exactly what happened. The seller stepped in, and then they really smoked this market to the downside. So I'm a happy person. I really like that. Let's go ahead and take a look at the support zone that Andrea was speaking of. I believe that you probably want to buy gold. You don't necessarily want to sell it, but on an intraday basis, sell it. Take the money, sell it. There's no problem with that. Big picture, you probably want to be bullish. So here's the 4-hour chart. Let's go ahead and have a look. You can see right here, interesting market dynamic right off the bat. I look at it, and it's almost a cup with a handle. Not really that perfect, but it's not a bad one. You've got definitely a topside resistance zone right up around where? 43.50. Big round numbers. Always remember them. It's not an accident. You've had the seller step in and really defend 50? How many times? Once, twice, 3 times. Okay. So now the pullback is there. What do we want to do? Do we want to buy it right now, or do we want to sell it? Well, for me, the gold futures trade was a scalp. I was always you're in those trades for you saw tick scalping. We were in that for just a few seconds. That trade I was probably in for about 6 minutes, 7 minutes, because I wanted to I wanted more money. Sometimes you do that. Sometimes you don't do that. I was in a position to do it, so we did it. This right here is a nice double top up here. So the first thing I would point out on gold is resistance is there at 43.50. No question about it. So the question I have is, do we want to buy or do we want to sell? Well, the level that we're sort of talking about is a 62% level on a 4-hour chart. Spike low there. I'm going to have to dial that in just a little bit better. So there's your level, 42.93-ish. It's working very well. You got a $10 bounce off of that. I would probably be looking to buy that the rest of the day. More than likely, that's going to be today's low right at that 62% level. What is the absolute extreme? Your low right there, you're looking at about 42.85-ish. That's tough. That's going to be tough to trade. You're going to have to dial your leverage way down on that. That's one of those trades that you buy 95s and you're probably going to be in pretty good shape. But if it bleeds against you down to like 85, then you're on the hook for like that $10, and that could be very, very difficult. So I'm interested in this trade. I think it's a fantastic level. I think it's a great spot. What I would be looking to do more than likely would be just a limit order down there at about 42.95 the rest of the day. More than likely, you're going to get just a real nice rotational afternoon. And what I mean by that is you got about 3 hours left in the U.S. session. So you're looking for the market to do not much of anything. And the reason why is you have NFP tomorrow. NFP lives tomorrow. We'll get you lined up with the scheduler in a minute. That jobs number is a huge one. Nobody really knows what to expect out of that jobs number. And there's going to be a lot of folks today that don't want to trade anymore. They go, we don't know what's going to happen tomorrow at NFP. We're going to sit back and take it easy. Now, if that's the attitude from the broader market sentiment, if that's the attitude, then we're going to have a fantastic opportunity to bid that really the bottom of the day's range. I love that trade. Probably make that trade 3, 4, 5 times if it comes our way. Will it come our way? Well, you're getting a bounce right now, right up around 50%, about right above 4,300 there. I think you probably get a shot later in the day. I would give it another 2 or 3 hours. But if you do get an opportunity to bid down there, can't tell you what to do. I'm not a money manager. I'm not a financial advisor. But that's a pretty darn good support zone. That's for sure. TM, good to see you. T Marina, good to see you. Shane, can we check out silver and gold? Absolutely. We're going to have to get over to silver. Silver has basically single-handedly sunk the Christmas contest over at TradingView. I ended up just taking a short, thinking we would sell off a little bit, getting destroyed on the position. Right now you got silver up around 63. You're going to 75. There's really no question about it. The only real thing that I would say is that the timing is going to be precarious. We don't really know when we're going to get to 75. That's for sure. Let me see. Checking out gold. Yeah, so let's go ahead and get on over to silver. T, that's a pretty good idea. This market, you can see all of our scribbles from last week. I don't know if you ever watched a football game where they start diagramming things and you get the telestrator out. Well, that's pretty much what happened here. We're going to go ahead and we're going to wipe all the lines off the chart. We're going to try to figure out exactly what's happening with silver, but I can tell you just by glancing at the chart right now that we're extremely bullish. Extremely bullish. A couple things I would point out, though. The first thing would be this. Silver's not above a major sweep. That right there is a sweep. Now, that's a 4-hour chart. That's a major pull-off. That's about 4.17% in 4 hours. That's the silver market. And what happens in these markets, more times than not, you see where you're building momentum. The bidders are coming in. Retail longs from here. The bidders from here are making money. The bidders from here are making money. The bidders from here made money until it all ends. And they come out, they pull the rug out, and basically eliminate all your retail longs. So right now, the market is regrouping. Clearly, you're bullish. There's no question about it. Clearly, you're bullish. A couple things I would point out here on this 4-hour chart, which is a fantastic time frame for silver. I mean, if you're interested in trading silver and gold, 4-hour charts are pretty good. They're global commodities. Now, crude oil is a little bit different. Even though it is a global commodity, it's a little bit different. But gold and silver, man, they typically spin around the clock. The afternoon in the United States, probably the next 4 to 5 hours, you see the metals trade really slow down, but then it starts picking up as we go into that Tokyo session. So for me, I have no problem with the 4-hour chart trading gold or silver. Now, the thing about silver, especially on the futures markets, is that the margins are huge, meaning it's expensive to trade silver. It's not an easy thing to do. You have to have a lot of money and you have to have a lot of patience. For me personally, it's too expensive for a futures contract. I believe it's $25 a tick, which is big. And then also you've got the margin requirements, I believe, are in the 50s to hundreds of thousands. So it's a very volatile market. Now, on the spot market over at Switch, you can trade these things, dial your leverage way down, and still be involved in the silver market. For me personally, I'm not really involved in the silver market. We'll look at micro silver futures at some point, but this is one of those markets that is an absolute explosive to the top side. I mean, this is an explosive. They talk about explosive plays in football and explosives anything over 25 yards. This is an explosive market. This market doesn't just move a little bit. It moves a lot. And right now, you've broken above all topside resistance. There's nothing there. There really isn't anything there. We talk about 63, 64, 65. Where are the sellers going to step in? More than likely 75. Now, that 75 call, we could be sitting here next Christmas, and I could be saying, well, there's 75 in silver. When we trade with leverage, we can't really do that. We can't take those positions. We have to be more cautious. But if I'm making mistakes in the silver market, I'm damn sure making them to the long side. The demand is there. The supply isn't really there. And the U.S. dollar, well, most of you guys know what I think about the U.S. dollar for 2026. It's going to go way down. Why? Rate cuts, interest rate cuts. Excuse my voice. You're going to have to bear with me. I lost a lot of it on Saturday. But you're going to have to really stay in these markets and be aware of what the U.S. dollar is doing. We're going to talk a lot about that as we get into the new year. Well, I mean, let's just go right over. This is what we're talking about for your new Fed chief. Hassett's Fed chair candidacy received pushback from high-level people close to Trump, sources say. So what does all this mean? It means that he didn't want to cut interest rates as much as they want him to get cut. That's the bottom line. I mean, you're gonna cut interest rates down to nothing. That's the bottom line for 2026. So if you get in that aggressive rate cut cycle, what happens to metals? What happens to commodities? And what happens to stocks? Risk assets are going to go way up. Why? Because there's more money in the system. Essentially, what you do when you cut interest rates and you inject capital into the economy is you devalue that dollar. It's no secret that Trump wants a weak dollar. It's not necessarily because the dollar is weak per se. It's that why does it need to be valued this highly against other currencies when you're trying to do business abroad almost exclusively? So, number one rule of currencies is sometimes they can be too strong, especially if you want to play ball in the export sector. And a lot of that is basically the Trump doctrine of economics. Cheap money, expand. What happens to the dollar? It gets destroyed. Now, is it already destroyed? Yeah. There's too much debt here. The amount of money that it costs to buy anything here in the United States is unbelievable. It's ungodly. Right now, a lot of you have it worse where you live. Believe me, I've been in London. I went to buy a pint in London one time, and I couldn't believe how expensive just a pint was. But the prices of just staples here are out of sight. I'm talking housing. I'm talking food. These are things that have to be addressed, and if they're not addressed, you're going to have real problems. You're going to have social unrest on a scale that we've never seen here. But is the cheap dollar the way out of it? I don't know. So if there's pushback against Hassett, what does that mean? It means that he's not going to cut rates the way that he thought he was going to cut interest rates. That's the bottom line. Right here, you got a 4-hour chart, silver, very bullish here, very bullish. You're filling in this big sell-off that we saw on the 12th of December. You're filling in basically that entire candle. What do you want to do here? You want to buy or sell? I want to buy it. From right this level, though, no, there's no hurry. There's no reason why we have to run into this market. Right there, 13-period EMA down there. That's a pretty good bid. 62.84 is pretty good. 63s are pretty good. You definitely want to get to the long side of this market. But here's the thing. NFP tomorrow, CPI Thursday. Be very, very careful holding positions. The tick scalping webinar we did last week is how I'm approaching this week. We're in, we're out. We're in, we're out. We're not going to let the market get the best of us. We're not going to sit around and wait for a huge NFP surprise or something to really shake our foundations. We're not doing it. CPI is the same way. This is a big week. There's no doubt about it. This is a big week. So I got way behind on the live chat. Sorry, guys. I'm just sort of rambling here for a Monday, but we've got a few trade ideas that I think are pretty good, one of which is in the WTI crude oil market, which we're doing pretty well over there too. So it's good to see. Let's see. The spread. Yeah, the spread's ridiculous. When you start talking about trading the spread on a silver, your leverage is going to have to be very, very low, T. No question about it. The yen. Yeah, let's go ahead and get into the yen. Let's see. Hello, sir. Carito, good to see you, Carito. Welcome. BOJ preventing the yen from getting too strong. Well, I mean, that's what it is. That's the bottom line. When we talk yen, we talk devaluation. And it goes back to about right around 2000. I mean, I could tell you the story of the Japanese yen and the Japanese economy. It really does go back to World War II and what happened in the fallout, which was a catastrophe for a lot of folks. But about the 1940s, early 1950s, the impetus really was placed by Japan in becoming a global player in the export sector. And it was one of the biggest booms of all time. And from about 1955 all the way up through the 80s, the Japanese economy did something that really nobody had ever seen before. And it was all based upon exports. It was the old video cameras, the innovation, the technology to be able to export goods that everybody wanted. Then 2000 came, and you saw the dot-com bubble, and then everything started changing in a big, big way. And you had, I believe there was a couple of earthquakes in there, and then years later, the Fukushima incident was really a big one. The nuclear meltdown there with the tidal waves and all that jazz. I mean, that was a really, really monstrous thing. And the way that the BOJ approached it, and the way that the Japanese folks approached rebuilding their economy was through a devalued yen. And I've said it over and over and over again, and I mean it. I mean, the United States is going to do the same thing with the dollar. How long it takes to get to the yen level of inflation, I don't know that. But we can start to see the foundations being built to really go towards that Abenomics, where you're looking at a lot of yen in the market. You're looking at deregulation. You're looking at making that export sector hyper competitive. The way you can do that is devalue your local currency so it doesn't cost you as much to build the things that you're going to sell abroad. Is it smart? I don't know. It's worked in some ways, doesn't work in others. Bottom line is this. For the BOJ to raise interest rates means that there's trouble in paradise. That means that inflation has gotten to a point where it's almost untenable, meaning the system may collapse. I see the interest rate hike out of the BOJ that's coming Friday to be probably one of the biggest things that's happened in the forex in years, realistically since COVID, no question about it. So what happens to the yen? Well, I mean, you got your 4-hour chart right here on the yen. I mean, we can do all sorts of different things to trade it intraday. First thing I would do is probably just go right here, spike high, spike low, pull back. What do you got? 62% level, right up around 155.50. Probably a pretty good short if you're looking to make, 10, 15 pips, a real tight scalp. Nothing wrong with that. But from a bigger picture, from a broader perspective, what can we really say about the yen? I mean, here's the roadmap. 2025's high, 158.88. Okay. Are we going to make a run at that high, you think? Probably not. 155.33. I would say the top is in for this year. I would want to be buying pullbacks, but it's got to be a legitimate pullback. I mean, we have to see this market move. Now, look at what's happened the last 4 weeks. You're absolutely flat. We've traded inside of that week of the 17th of November before Thanksgiving. We've traded inside of that week for the last month. What does that mean? It means this market's coiling up and it's getting ready to move. BOJ is probably going to be what moves it. So if you see a hawkish BOJ with the rate hikes and then a lot of folks that are coming in saying, okay, we're going to stay hawkish here, then you're probably going to get an opportunity to bid this thing from 38%, which is 153.20. Right now we're trading about 155.34. So you're 200 pips away, 210 pips away. It's a long ways away. You can get that trade this week. So if we're looking at a 13-week EMA down there right around 153.40, and you've got 38% down around 153.20, you get that pullback, you're in business. So to me, we pull up the 4-hour charts and the 30-minute charts, and we do all that, and it's fun. The tick scalping on the 5-minute charts and the 1-minute charts, it's a lot of fun, but a high probability trade is right down there, right around 153.40-ish, 153.50. That's a high probability trade. 4-hour chart, 30-minute chart. It's almost a Bollinger W. I haven't done one of those workshops in a while. It's almost a W. There's your move, boom. There's your outside. There's your pullback, bang. There's your big green bar. I mean, it's almost a Bollinger W. 30-minute chart, though. Do you really think that's a good play to make? No. No. You don't make that trade. Not with NFP coming, not with CPI coming, not with the BOJ getting involved. I would let this week settle if I was trading the yen. But if you got to do it, you got to do it. I understand completely. Let me see. Ahmed. Hello, Shane. I hope you're having a great day. Nikkei still hanging above 50. 50 is the big deal for the Nikkei. No question about it. I mean, that's it. 50. It's called the point of control. There it is. That's the zone. We've traded 50 how many weeks in a row? 1, 2. Well, actually, right there, I would consider that a 50 call. 49,969. 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks in a row we've traded 50. So is 50 support or resistance? What is it? Is it support? Is it resistance? It's neither. This is an area of two-way action. That means the buyers and the sellers are duking it out. It's called a point of control. We rally above it, we can't shake it. We rally below it, we can't shake it. We rotate right back up to, to 50. That is probably the textbook definition of a point of control. So how do you trade something like this? I'd say, well, a couple of ways you can do it. Support zone right there, 49.5. Love it. I mean, that's going to be a pretty good level. As far as trading, with the idea that you're always going to get a reversion to the mean, and if the mean value is 50, how would you approach that? We just go to our tool belt. We say, okay, that's a rectangle. Spike low there, spike high. 50's in the middle. What would the game plan be? You're bidding the bottom of the range, you're selling the top of the range. If the price breaks out against you, you cut your losses and you come back for a better trade later on. But this right here, got to figure that if you get extended down here to the bottom, right around 48, 48.5-ish, you're probably going to rotate back up to 50. If you get up here to about 51, maybe 51 and a quarter, you're probably going to head back down to 50. That's how you would scalp this. That's a weekly chart. Let's take it down to a 30-minute chart. What's the common denominator, no matter the time frame? 50. I mean, there it is. Boom, 50. Rally, back to 50. Boom, 50. Rally, back to 50. Look at this breakout. Boom, right back down to 50. So if you're trading the Nikkei, be aware of 50. If you're not aware of 50, you're way behind the curve. Way behind the curve. Let me see. You're welcome. You're welcome, T. Let me see. Masood, Bitcoin is going to be busted again. Let's have a look. Let's have a look at Bitcoin. If you guys have any other markets you'd like to look at, I'm more than happy to go over them. And then we're going to set up the week's sort of the week's schedule. 85.6, down about 3%. Crypto's crashing. I already see a great trade that's coming our way. I'll show you that one in just a second. But so Bitcoin is in an interesting situation. I'm bullish Bitcoin. I've been bullish Bitcoin for a while. The charts don't lie. They really don't. That's a monthly chart. You can see the uptrend. But now we are really diving back down into what I would call the range of the past 18 to 24 months. So for me, I mean, it's relatively straightforward. You got a spike low here. You got a swing high there. And you're right around 78%. So the 85 buys have been absolutely money in the bank. They really have been money in the bank. So the question is does this thing hold up now? Or are you going to see the crash that we were really talking about last month? Monthly low is huge. So you got to keep a close eye on November's low. November's low is down there at 80. 80,000's big. So if you do trade beneath 78%, 85.5, and you wash out last month's low, you're going to 75. It's just the way that it is. When 78% doesn't hold, you go and you check out the swing high or the swing low. In this case, it'll be the swing low down around 74, 75. So be very, very careful holding longs. If you're long right now Bitcoin and it's a trade, not an investment, 85 is a big deal. And if 85 does not work and the bidders aren't there, then you could easily see a sell-off beneath last month's low and you could see a crash down to 75. In my opinion, you're probably going to get the crash to 75. Unfortunately, it's about, 2 weeks too late? That's what I had in that TradingView contest. I had shorts on all this stuff. If you're going to win a contest, you got to make a lot of money. And the shorts, I thought they were pretty good. Ethereum was another one. The Ethereum chart scares me a lot worse than the Bitcoin chart. Right there, spike low, spike high. Okay, 62% is a big one, 2,700. But this area right in here is far more explosive than the Bitcoin short. And the reason why is it's compressed. Take a look at our chart. Take a look at your range. We have traded, I mean, it's almost an inverted hammer at this juncture. But if you do see a sell-off beneath that low, 2621-ish, Ethereum crashes. You go down to about 2100. And I think that you're onto something, Masood. Bitcoin is going to get busted again. These technical levels are no joke. If they do come into play, you're going to bring a lot of selling into the market. And by the end of the year, or at the end of the year, we haven't got reestablished back up above 100,000. That's big for crypto. I mean, that's really big for crypto. So if this thing does, in fact, sell off beneath last month's low, Ethereum's down, Bitcoin's limping. Do we see a big correction in 2026? I don't believe so. I believe we'll get discount buys, and we'll be here every step of the way to point them out. All right, one last market here. This is sort of my pet rock. This is an old friend. This is an old friend of mine, Shiba Inu. Made a lot of money trading Shiba Inu. Left a lot of money on the table. Made the money down in here. I wasn't in the market there. That was hard to take. That was a significant amount of money. And liquidated, pardon my voice, liquidated right in here when we had the big crypto bank meltdown. That was, 2 years ago, last May. Sold it, sold my stake. Really missed out on that. And here's the thing about that candle right there. You're talking about going from down at around 7 up to 45 or 50. That's, an 8-banger, a 9-banger, 9-fold returns. A lot of people get in the markets to get rich. That's one way you can do it. So the question really is now is, what is Shiba Inu? Is it ever coming back? Is crypto coming back? I believe crypto is going to be bullish. There's no question about that. But is there any reason to buy Shiba Inu right now? I don't see it. Why? Right there. There's your low. Your low right's around 55. So, and I'm just abbreviating. You can see that this decimal, I'm not going to sit here and say 0.00055. I'm not doing that. We're right around 55 down here. So that would have been your low. You've got compression right here. You got a really tight November. You got a nice sell-off in October where you got a nice low down there, right around 7. That's a pretty damn good buy. Well, the only thing better than that would be like to test that 5 level, and I think we're going to test it. And I'm grinning ear to ear because if you get an opportunity down there to do some work right around that all-time low, right around 5.55, somewhere down in that zone, I mean, it's really a banger trade. And one of the things about a Shiba Inu trade is that, sometimes you do get an explosive move to the top side. Now, one thing that's concerned a lot of people, there's your lows. That's your all-time low. You've got compression here. How bad does it get underneath 5? It could get bad down there. I think that if you bought 5s, if a person bought 5s, 55, I think that if the market gets away from you and challenges 25 immediately, so if you lose 50% of your position like in a day or two, you got to stick in there, stay the course, but that's not a good sign. So if the bidders aren't there right around 55 or 5, it could be very nasty. It could be very, very nasty down there. And what happens is when you take a trade like that and it goes against you, you have to hold it. And what that does is it ties up your money, it ties up your capital. I've sort of alluded to being in the real estate market back in 2008 to 2013. And unfortunately, I had some big positions out there. I had a lot of real estate. And I remember one of the houses, actually the house that I was living in, was brand new. We built it. It was a beautiful home. And I said, okay, we got to sell this thing. put it on the market, didn't show it for 2 years. A year and a half, there was 2 showings. My point is this. The money was tied up. It was in the assets. So if you're looking at like a Shiba Inu, and let's say, you say, okay, 55, I love that level, and you show up, and and you put 50 or 75,000 into it, and you go, okay, well, there's a real chance that you're going to get paid off 3 to 4 fold to the top side. The problem is this market could definitely just tank and hang out around 5 for years. That's the problem with retail trading. That's the problem with trading in general. Doesn't matter what time frame you're doing business on. If you get stuck in a position, those scalps become trades. Those trades become investments. Those investments become your entire life. You can't get out of it. So that's definitely proceed with caution in those markets. I love the top side of crypto, not because I'm a blockchain guru or that I really even understand it. I just you see things lining up. You're going to get a devalued dollar. The Trump administration is going to deregulate as much as they can in the crypto sphere. Those are bullish market drivers. It would be really difficult to lose money if you took a 3 or 4 year position in this. The problem is who's got the cash to sit around for 4 years. All of a sudden you need the money, and then when you need the money, you got to liquidate, and that's a wrap. Then you end up taking a loss. I guess that's the theme of today's stream. Be careful. Be careful with what you're doing. Always have a good idea of what you want out of the market. The tick scalping stream, we knew exactly what we wanted to take out of the market, and we went in and took it, and then we moved on. In my opinion, that's what trading's all about. But there's a lot of traders out there, and there's a lot of folks out there on YouTube that will tell you that it's all about Ferraris and it's all about private jets. Maybe it is for them. I don't know. Personally, I like survival. Survival's a good thing. And as long as you don't hang your chin too far out, you can't get your head knocked off. And I really do preach caution a lot. All right, everybody, I'm going to go ahead and sign off today. We're going to go ahead and let's go ahead and give you the sort of the lineup for this week. NFP live tomorrow, bright and early. Be sure to tune in. I'll be on 10 minutes before the NFP number drops. Hopefully my voice is back a little bit better than it is. I blew it out pretty good on Saturday, though. So we're going to have NFP live for you Tuesday. Wednesday, EIA crude oil stock. Not really a huge number, but we're going to look at it. We're going to take a look at it. Thursday, CPI live, BOE, and the ECB. I mean, Thursday's a big one. You've got inflation numbers. You've got the BOE. You've got the ECB. You've got a lot going on. And then Friday is going to be the BOJ interest rate announcement. So if you're going to be trading the Japanese yen, be careful late in the week. That's when the volatility is going to spike and come your way. Also, if you're a Switch Markets client, you're going to be getting our newsletter is going to be dropping before the London session tomorrow. And I'll also have the picks of the week. We'll make a nice little video and highlight a few of the more popular assets out there. I think it's going to be a lot of fun this week. Don't get too carried away. It is the holiday season here in the United States. Volumes, honestly, I'm watching volumes. They're not great. And the markets really aren't moving. I don't expect them to move the rest of the day, but they may. As always. All right, guys. I'm going to go ahead and sign off here for a couple hours. I'll be back bright and early in the morning. Congratulations to those Montana Grizzlies, though. Absolutely fantastic show. Gave my dad a hell of a birthday present, 79th birthday, and we were grinning ear to ear. Just an absolutely, just a banger of a showing. Congratulations to everybody that was in the end zone, everybody that was making tackles, to the entire fan base. This is the biggest game in Montana State history. Is coming up on Saturday, and I'm not going to be there. Too much money. $5,000 to sit on the 50-yard line. Are you kidding me? At some point, we got to say, hey, too rich for my blood. That's billionaire money there. $5,000 for 3 hours of entertainment. Holy cow. All right, guys, I'm going to go ahead and sign off. Lita, you're absolutely welcome. Bobby Bob, you're absolutely welcome as well. Just remember, we had one call here on WTI crude oil, and it is coming off big yearly lows down there at 55.15. We are trending that way right now. I'd be watching 55.25 to be robust downside support, but it looks like our short positions are doing pretty well. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.